Hello everyone, welcome to the Ichimoku.co daily FX market review for the trading day ending Thursday, July 28th. Firstly to cable, British pound, US dollar, and here we see a black body candle forming a switch in net momentum away from the buyers to the sellers slightly. Not terribly significant. Support coming in down at that 131.21 level, which has been a very important level of support in recent times. Importantly, the market attempting to trade through the Tankerton indicator but closing back down below, and that continues to be an important area of resistance for this market in recent times. At the moment in the new session we are finding some resistance coming there as well. Now, a solid bullish close up above the Tankerton could see the market trading back up to around this 135 level, where we're likely to find fairly strong resistance. In terms of Ichimoku, a bear market in the longer term time frame and still looking very overextended in depth of price action away from the Ichimoku cloud. Bearish in the medium term time frame by trading well down below the Kijun-sen, and that Kijun-sen has been pointing flat. The market has been attempting to retrace back towards that equilibrium, but has found strong resistance at this 135 level in recent times. Now, just looking at the bands here with cable, and here we see the bands squeezed up very, very tightly, reflecting a distinct lack of lack of volatility in this market at the moment. No momentum in terms of trending price action because of that lack of volatility. The market moving sideways, the bands are pointing sideways, and we will be looking for a breakout in either direction. And if we do see a bullish breakout with strong bullish follow through, and we would need to see the market break out through that 135 level, then we certainly could see the market trading significantly into and retracing this strong downtrend that we saw after the Brexit vote. If we do see a bearish breakout down below the bottom band with strong follow through, our benchmark will be the 127.99 level of previous support. Next to the euro US dollar, and here we see the market rallying after a very large white body candle from the previous day's trading. That was the largest white body that we had seen for quite some time, reflecting the buyers in control showing some strong commitment, good solid upside momentum, taking out the 110.50 level of previous resistance and support. But today we've seen the buyers lose commitment above the 110.97 level, with the sellers taking control by closing down between the midpoint level and the low. This does suggest that we may not see the trend continue to the upside. Now, we have very strong resistance at that 110.97 area as mentioned, and also for today 110.50 is held as support. So in recent times holding as resistance, prior to that support, now support today. So these are our benchmark areas moving forward. We do have a bear market in the longer term time frame as well as the medium term time frame, but just slightly bullish now by trading above the Tankerton, giving us a slightly bullish market in the short term time frame. Just taking a look at the bands with the euro US dollar, and here we see the market testing up to that upper band, and this does suggest that we may be seeing the market starting to transition into an uptrending phase. It is still early days yet, but this is how these transitions usually manifest themselves, with this previous strong downtrending activity then trading back within the bands, finding resistance either at the middle of the bands or at the top, and then trading up within that top half and of the bands, and then breaking out to the upside. But still early days, we can't preempt the market. The important features here are the resistance at the upper band, the price rejection from there, but the support coming in now at the middle of the bands, whereas it was previously resistance. So this suggests that we may have seen a change of sentiment in this market. Now, as I've said, may have seen. Very often we can see the market oscillating between the top of the bands and the bottom of the bands, and it wouldn't take much for that to happen here because the bands are squeezed very tight. Now, also we need to consider, with the bands being squeezed tight as well, that does suggest that we are looking at a cyclical low in volatility, and suggesting that we should start to get ready for some trending action in either direction. Now, obviously, we don't know for sure what direction that will be, but we will be guided by our breakouts and follow through from the bands. Just looking at the hourly charts with the Euro US dollar, and for the start of the trading session today, the market was looking rather overextended in depth of price action away from the Ichimoku cloud. The buyers continued in the market, finding support around the Tenkan-sen, trading up through that first pivot point resistance level, but then trading off, trying to find some equilibrium in that longer term time frame. At the moment, we are still trading well above the Ichimoku cloud, and suggesting we could see the market attempt to retrace back to find some equilibrium. But as we move further into the trading day, the cloud moves higher to closer to where we are actually trading at the moment. So it will lessen the urgency for the market to attempt to retrace, and suggesting that we may not see, if we don't see any strong selling in the next probably 3 or 4 hours, we're likely to not see any strong selling in the trading day. Importantly, we are facing some strong resistance around the middle of the pivot points here at 110.82, and also there is potentially strong resistance just above there at the Kijun-sen at 110.89. If the buyers are strong enough to trade up through there, we could test the first pivot point resistance level at 111.12. But if the market can trade down through the Tenkan-sen indicator, which is just below the middle pivot point level at 110.77, we could see a test to the first pivot point support level at 110.45 over the next couple of hours.